Mistakes in trading can cost a lot. Each wrong trade not only reduces your capital but also hurts your confidence. However, there is a way to avoid most unnecessary trades, and that is using a checklist. This simple but incredibly effective solution will help you approach each trade in an informed way and reduce your risk. So, what should be on the ideal trader's checklist? Today, we're going to break it down one by one so that every trade you make is as well thought out as possible. Before you start analyzing the market and open trades, be sure to check what news is planned for today. This is a crucial step, especially if you trade in the Forex market or other news-sensitive financial markets. If you trade in Forex, one of the most popular tools for tracking news is the Forex Factory website. These calendars display the release schedule of important economic events and their potential impact on the market. On most economic news sites, the importance of events is marked with colors or icons. For example, red color or 3 stars indicate events with a high level of market impact. Trading during such news is extremely risky. The price may start to move sharply in one direction and then suddenly turn around. Yellow color or 1 star marks less important events. Such news usually does not cause significant price movements and does not pose a serious risk to your trading. If you see that important news marked in red is planned for the next hours, it is better to avoid trading or reduce the volume of trades. However, if only low important events are scheduled for the day, the market is likely to behave more steadily, and you can move on to the next point in the checklist. Once you have checked the news and made sure it is safe to trade today, the next step is to determine the current market structure. This is crucial to understand which direction to move with the market. The market can be in one of 3 states: upward trend, downward trend, sideways movement. For accurate analysis, always start with a higher time frame to understand the big picture. How to use time frames correctly? If you are trading on 1 5-minute time frames, open a chart on the H1 time frame. If your trading takes place on 15, 30-minute time frames, look at the H4 or even the daily chart. Here's a simple example of why you should always do this. You are analyzing the market on a 15-minute time frame and you see an upward movement. Convinced of the upward movement, you open a buy trade. But after a while, the market reverses, the price starts to fall, and you lose money. After that, you decide to look at the chart on the H1 time frame and find out that on the higher time frame, the trend was downward. Moreover, your trade was opened at the exact moment when the price approached the resistance level, which increased the probability of a reversal. Analyzing the market structure on the higher time frame helps you avoid mistakes such as opening trades against the main trend. It gives you a full understanding of the current market situation and allows you to act in a more informed manner. Now, before you open a trade, it is important to understand where you will place your stop loss and take profit. These levels determine how much risk you are willing to take and how much profit you expect to make. It is recommended that you set your stop loss so that your risk does not exceed 1 to 2% of your deposit. If the potential loss on a trade exceeds these values, it is better to refuse to open it. This approach helps to protect your capital and avoid catastrophic losses. Setting a take profit is important as well as a stop loss because it helps you not only to protect, but also to fix your profits in time. Before you open a trade, check that it matches your risk-reward ratio. This ratio shows how much you are willing to lose for a certain profit. I will not focus on this point in detail because there is already a separate video on my channel fully dedicated to the topic of risk-reward ratio. In this video, I tell you in detail what it is, how to calculate it, and why it is so important for successful trading. Be sure to watch this video to get a better understanding of the most effective risk-reward ratio for profitable trading. If all the parameters of the trade, risk tolerance, risk-reward ratio, and predetermined stop loss and take profit levels meet your criteria, this is another confirmation that the trade can be opened. Another important point in your checklist is to check your emotional state. I will never tire of repeating. Psychology in trading is probably the most important aspect affecting your success. Before opening a trade, be sure to assess your current state. If you have thoughts in your head like, "Today is definitely my day, all trades will be profitable," or "I have 3 losing trades in a row, I need to get even and get my money back," then stop. These are clear signals that you are making a decision based on emotion rather than analysis. Such thoughts can lead to impulsive actions and new losses. Now let's consider the opposite example. If you analyze the market calmly, without emotions, your trading plan coincides with the current market situation, and the risk on the trade is calculated in advance, it is a sign that you are ready to open a trade. Your emotional state is not just a factor, but the basis on which successful trading is built. If you are calm, confident in your analysis, and understand your risks, then the trade makes sense. But if you feel excitement, euphoria, or desire to win back, it is better to stop. Remember, the market will not disappear, and missed opportunities can always be compensated by high-quality trades in the future. The ability to say no to yourself sometimes saves your deposit better than any strategy. Trading is directly related to psychology. In the market, you are alone with your emotions, and it is the market that shows who you really are. But what to do if emotions take over and prevent you from making balanced decisions? One of the solutions may be to use the MiloBot PRO Expert Advisor. This robot works according to a predetermined algorithm, which eliminates the influence of emotions on trading. You don't have to worry about impulsive decisions or fear of missing out on profits. MiloBot PRO analyzes the market, finds the right entry and exit points, and automatically makes trades for you. With MiloBot PRO, your trading becomes systematic, disciplined, and free from emotional decisions. If you want to try how it works, the link to the Expert Advisor is in the description. See for yourself how automation helps you achieve stable results in the market. Now you know what the checklist should consist of and what you should do before opening a trade. I advise you to always stick to these points, and in time you will be able to add individual points to the checklist that will help you to become a more confident and successful trader. If you enjoyed this video, don't forget to like it and subscribe to the channel. This will motivate me to continue sharing useful trading tips with you and create more quality content.